Hey everybody, it's Chuck Barone. Tuesday, June the 27th, 2022, and a very interesting day today. One of those odd days where, in a very negative cycle, some positive stuff happened. Crazy. Anyway, before we get rolling, let me welcome everybody to the show. And as always, thank you guys for your support. We appreciate what you guys do for us, turning up here every day to watch the videos and your questions, comments. It means the world to us, guys. Keep doing that. We appreciate it. All right, so let's look at these markets today. We knew today would be a light data day, and that any data that came might be something that would move markets. We got some small report. We knew we were going to get the durable goods order today. We got it. It was very good. We also got a consumer confidence report that was way higher than expected, and new home sales coming in way higher than expected. So a lot of upbeat economic news today. Markets jumping as a result. The Dow up 212 points, 33,926. S&P up 49 points today, 4378 on the S&P. NASDAQ up 219 to 13,555. Now I'll tell you, these markets have kind of been trading in a very choppy trough. Up one day, down the next, really reacting to the data as it trickles in, and any kind of anything coming from the Federal Reserve, especially from Chairman Powell. Words can move markets these days more than they usually do. But a good day for stocks today and a good day for the U.S. economy today. Bond yields today, surprisingly up. The 10-year up 5 basis points to 3.77%. 2-year also up 4.77%. So you got the 1% inversion. The bond market, I don't know, guys. It's always been a really odd thing to me that anybody would spend, if you have $1,000 to invest in the bond market, why on earth would you commit your $1,000 for 10 years to earn a full 1% less if you only committed your money for 2 years? I don't get that. Most people are going to chase a higher yield. Shorter term is where the yields are. It's just a weird scenario right now. But nonetheless, decent returns for savings accounts finally, money markets. So this short term, this inversion, going to turn out to be okay for, savers for a change. Savers are going to catch a little bit of a break. It's kind of get the banks freaking out a little too, because, they are losing depositors. Depositors in this environment are withdrawing funds to put them where they can get higher yields, forcing banks to actually compete for your money for a change and not just take your deposits for granted. So yay for us. Dollar today, well, not much happening with the dollar, down small, 102.49 on the index, just hanging in there. Not much to talk about with the dollar today. Metals, gold and silver mixed today, with gold falling $9.70, $1,913.10 for an ounce of gold. Silver gaining 8 cents today, $22.84 for an ounce of silver. Prices hanging right in there with metals. In face of a strong dollar and I'm sure some profit taking. Always going to have the markets being manipulated a little bit in gold and silver. I think gold 2000 scares some people, but it's going to happen, and it's going to get there and stay there, just like silver will get above 25 and stay there. Oil today, wow, down again. Oil down $1.60 a barrel, $67.77 for a barrel of West Texas Intermediate. Now starting to get below that trough number between 70 and 75, where it's been most comfortable. We'll keep an eye on this, but my guess is maybe we'll go down a little further, but we'll rally and we'll soon be right back between 70 and 75. It's just been as predictable as the sun coming up in the east. Bitcoin today, up, another update for Bitcoin, $415 gained. $30,614 for Bitcoin, a great price, man. Bitcoin doing very well. I got to admit, I wish I was 20 or 30 years younger, so this could be something that would come natural to me. I still need to do my homework. I've been procrastinating just a bit on what the heck Bitcoin, why is it holding up when the crypto world seems to be in such turmoil? Very interesting. All right, so let's talk about news today. Not a lot going on, as I said, but we did get the durable goods order, and this came in big surprise today. Orders jumping 1.7% in May, huge jump. Experts, so-called, expected a 1% decline. So it looks like orders for airplanes, cars, and other durable goods, washers and dryers and refrigerators, jumping. It's really something. The third month in a row, durable goods have risen. So what do you think, guys, man? Maybe manufacturing is not as weak as we first thought it was. We don't really make a lot of stuff here in the U.S. anymore, especially the smaller, less expensive stuff. We tend to manufacture really expensive stuff like planes and cars, finishing, tech goods. But this is a good sign for the economy with what little manufacturing we have in this country doing well. Hopefully they'll start, those manufacturing jobs are typically better paying jobs than a lot of service jobs are. Hopefully this leads to an increase in, jobs in manufacturing. And hopefully, the trend now seems to be diversifying away from China and some of these hostile, lower-priced labor markets and back home to the U.S. Now, I understand that not everything can come back here. We all get that. But it would be nice if we could repatriate some of these manufacturing jobs, some of this manufacturing stuff that we've offshored, get some good paying jobs back here in this country, bring a manufacturing hub here so if the poop ever did hit the fan, we actually could take care of ourselves and supply ourselves. Imagine if we have a giant war with, let's just say, U.S. and China really does decide to go toe-to-toe. We're going to have a problem with that because a lot of the stuff we're going to need to fight that war gets manufactured in China. I don't even think we make our own uniforms here. So hopefully some of this manufacturing is going to come back to this country. Nice to see manufacturing, that little bit that's here, doing well. Consumer confidence report we got today. This came out of the blue. Surprising reading, also jumping, coming in at 109.7 on that consumer confidence index. That's a pretty good reading. Consumers feeling more confident about their own prospects and their own finances. The experts on this, again, I say experts with a dash of eye roll and so-called, they expected 104 on the index. So 109.7, that's, a pretty big miss. Nice to see consumers feeling a little bit better. I don't know, guys. It's really kind of a weird thing right now because, a lot of the evidence we see and talk about on this show every day shows the economy being pretty strong, pretty resilient. But it seems like the mood everybody has is like we're living through some kind of economic disaster right now. Most of the commentary about the economy is pretty negative. I think that it's kind of surprising because it seems like most Americans are doing okay. Unemployment is really low. People are making more money. Now, granted, they're spending more and they're in debt up to their eyeballs, which they should not be. But, the economy, it just seems to be better than we really figured it was. New home sales coming in today. Also, big jump in annualized sales coming in at 763,000, man. Way, way, way higher than the expectations. Again, the experts were expecting 675,000 annualized. That's a massive miss, man. So all this data coming in, pointing to a pretty strong economy. Now, new home sales, let's just be frank here, okay? New home sales getting a little bit of an extra jump because there's just no inventory on existing homes for sale. Okay, so that number, it doesn't come in as a surprise to me like it did to the markets. If you're in the industry, you understand the market and how it's working. Although a number this high obviously is a little more than anybody would have expected. But good to see. I'm not a hate America guy. So it's good to see the prospects for the economy and the prospects for that economy are looking pretty good. Everybody's talking about recession. We're going to get GDP numbers, I think, tomorrow. No sign of it, guys. The mood is negative, but the data is not. So it's a weird, topsy-turvy world we've been talking about and living through since we started the show last June. It's just been bananas, man. And like I've been telling you guys, we are living history here. People are going to write books about this down the road, and we're going to be a part of that story. So let's move on. The last thing before we wrap the show for the day, the consensus now, everybody's, I guess, the guessing game on what the Federal Reserve is going to do has a little bit of a split. We got Wall Street, and the Wall Street people making their bets, expecting another rate increase coming up in July, at the end of July when they have their open market committee meeting, which will bring the Fed funds rate to 5.35%. Wall Street agrees, the economists agree, another 25 basis point hike in July. So I guess there's pretty much unanimity on the idea that we're going to get another quarter jump in next month in July. But after that, they kind of diverge a little bit. Wall Street seeing only that increase in July. The Fed holding steady now till the end of the year with rate cuts coming in 2024. Obviously, Wall Street not seeing a real recession right now. We'll see. The economists, on the other hand, see not only a bump of a quarter point in July, but see somewhere between that bump and the end of the year, another quarter point increase to bring the Fed funds rate up to 5.6%. We'll see who's right about that. We'll be here doing the show talking about it. I think that I would tend to lean with the economists, especially with the economy showing resiliency like it is. We know the Fed needs to cool this economy down to get prices down. Prices have been coming down, even though they're sticky and kind of fudged a little bit. But prices have been coming, at least the rate of increase has been coming down. I'm not hearing my wife scream as much about prices at the grocery store. I guess she's digested the increases we've already had. So I got to side with the economists. I think we'll probably get another quarter point between July's increase and the end of the year, especially with everything being so data sensitive. I'm sure we'll get a shock somewhere or another to the upside on inflation, especially with upbeat economic data like we're getting. So we'll see how this week finishes out. We'll see unemployment numbers tomorrow. We'll get GDP numbers tomorrow and a whole bunch of other data between now and the end of the week. We'll be here, I think Thursday actually will be when we get the GDP and unemployment data. I'm skipping a day already. Anyway, we're going to be here every day to bring you guys the news you need. As always, we appreciate your guys' support. We thank you for that. If you guys could, please hit the like button. It changes the algorithm around and gets our video in front of a few more people. Have an opportunity to add some subscribers, get some extra views on the show. We would appreciate that. We'll be back tomorrow to bring you guys the news you need. Hit me up in the comments section for your questions. We'll be back again tomorrow. Till then, guys, take care. Thanks.